Right, so here we are for our live stream again. Euro session this time around. I'm just going to put the risk disclaimer up. Everyone can see that at the beginning of the video if they come back to the video again and have another look at it. That's important. But let's get to it. Let's get on with the trading and let's go and see how we're doing and what we've been doing over the last week or so and how things have gone. Now on the funded trader account, which is the funded trader markets, I'm using these guys. These guys have been kind enough to get involved and they're offering 30% off. I see it ends today. So yeah, okay, you're interested in that, I've left a link down below. But we're more interested in what's happening on the markets and what's been happening over the last week. Now I've taken a short on this US 500 and you can clearly see why I took the short on the US 500. If you look at this, this is definitely trending down. I'm not looking at the green candles here. I'm not looking at this as a recovery. If it does recover and go through to the stop loss, then so be it. But I'm thinking that this might just continue on down to the 5200. So I'm looking at that as a very good trade. How's it? How are you? Welcome. First comment of the day. We should have a prize for that someday. Smashing stuff, guys. Absolutely brilliant. But the Euro session, I'm not sure how the Euro session is going to go. The US session was quite busy. I'm just trying this Euro session out to see if there's enough interest in it and how it's going to go and that sort of thing. It's earlier for me as well. And we're going to do the US session on Thursday again because the US session was quite popular and obviously there's a lot of guys over the seas that for them it's early in the morning and the afternoon, and for us at the moment they're probably all still asleep. Anyway, so last week we took a trade on the Euro Great British Pound. You might remember we took this trade, and let me explain what happened with this trade and how it went down for me. We did actually make a small profit, oddly enough. I mean, not a lot. It's $20 on the funded account. But if I look at this, we were long. I took a long, and I didn't like the way it was just messing around and hanging around. So I moved my stop loss up to cost. And then I kind of moved it up again a little bit closer, and it put me into a bit of a profit. And I think my stop loss was at 84, 34, 35, somewhere around there. I'd moved it right up. And it was going up, and I thought, okay, you know, we'll see. I didn't add to the trade. I simply, so to speak, moved the stop loss up. And it came back, and it took the stop loss out in profit, and we're out of the trade. So that trade is gone, and I won't trade into it now because it is doing nothing. And I'm waiting for it to maybe come back down to this support level, and we'll see what happens there. Hi, Alice. Long gold US dollar, what do you think about it? I'm long gold US dollar as well, just not on this funded account. The funded account, as you know, guys, I can't take all the trades, and that's actually a bit of a holdback. I like the idea of funded trading, and as I've told you before, it's the first time that I've ever got into funded trading and played around with it. I like to trade with real money, and I did actually want to show you guys my MetaTrader 5 terminal, but I'm a little bit, maybe I'm a fossil, but I'm a little bit worried because my MetaTrader 5 terminal shows my account number on it all the time. Now, I'm not worried about this funded trader account because this is a challenge, whatever the case. But my real account, I'm kind of concerned because there's so much in the world. If somebody gets hold of my account number, what can they do with it? And it's like putting your bank account number out there. So I'm just a little bit nervous about that at the moment, and that's why I'm not showing you my MetaTrader account, because that is kind of one of my main accounts. What I'm thinking of doing is maybe opening a second account there that I can show you that won't have that much money in it, and it won't be that important, and then I can show you the MetaTrader stuff live, and that might be quite interesting as well. But let me work around that. Let me have a look at that, because you know, I have to have peace of mind as well, because there are so many people out there that will just try and, you know, kind of sort of rob you or whatever the case. So I'm just being cautious if you get that. But yeah, I'm also long the gold US dollar. I find it, look, that's why it's actually up here, so I can just keep one eye on it. I think 24.98 or something, 24.94. 24.94 was my entry on that one. And I would love to show you on my MetaTrader, like I say, but I'm just nervous about putting it out there and putting the account number out there because for some other odd reason, well, I suppose these guys do it as well because I suppose that's the account number on this funded trader thing challenge. But on the real account, they leave my account number up on the top left here, and I can't hide it. I can't get rid of it. So just for now, let me work on that. Yeah. Okay. So yeah, absolute pleasure. I'm absolutely pleasure. Don't mind sharing. That's why I've actually got this funded trader challenge going in the first place. So we can kind of have some fun, kind of trade live. And while we're about it, it's no concern. I don't have any sleepless nights about my accounts and things like that while I'm trading live. So yeah, that makes all the difference to me as well. So the US 500, we've gone short, as you know. We've taken the short trade on that, and I think I look here 54.67. So I've put that onto this account as well. As I've said before, with funded trading, this is a $25,000 account, which is actually losing at the moment. And you can't, like for example, with my real account, I can have 10 trades open and I'm not too worried. And I know that 5 of them will win and 5 of them will lose. And at the end of the day, I'll make a profit. And I can take the drawdown and I can risk the amounts that I want to risk and I can just leave the trades in. But what I've found with the funded trading is because of their limitations on the amount that you can lose on any one particular day, you can't have all those trades in at the same time because what I worked out for myself in my little head was if they all lose at the same time, they're going to shut the account down because you're only allowed a certain amount of drawdown per day. So you've got to be very careful of that. So it does take longer to build an account like this up. And the whole reason I took this challenge was to see what it's all about and to see what you guys were actually talking about when you were saying, oh, we can't do that because we've got a funded trader account. Most of the stuff you can do if you're patient and you're able to be patient. And as I said in my last live show, you know, I've got the time and I'm not worried about this as much as, for example, my real accounts and things like that. And also, so you're more relaxed and you can take your time and I don't need this to be passed by Monday or whatever the sort of situation. I know a lot of guys get into this and they need it to be approved right now. There's a lot of people out there that are, for example, you've got yourself into trading because you've seen some videos out there where people have said to you, you can make $1 million in a week and that sort of thing. And unfortunately, you can't. Unfortunately, that's just not a possibility. It's, how can I put this to you in the nicest possible way? Don't leave your job and just start trading because this is a career that you have to learn. You have to learn how to do this, and there's no salary at the end of the month. You have to work that out for yourself. It's like having your own business. You have to become profitable, and you have to become profitable before you start doing this so that you know how much money you're earning so that you can cover your costs on a regular basis, because it can be very stressful if you get into trading and you're not making the money that you require, and you're going to start taking risky trades based on the fact that you're not making the money that you require and you're trying to make more money. And that will make you even bigger losses. And I've seen some traders really go down a big hole because of that sort of scenario. So be very careful when you get into trading and just keep in mind that trading is a 50-50 game. My funded account was closed with 3K profit. I was told was risking too much. I think they just didn't want to pay out. Yeah, you see, Connor, how's it? But, you know, this is what I say, is you just don't know these days. There's so many scams going on out there. And I tell you, the funded trader market is under pressure at the moment. There's too many guys out there that have been causing a lot of hassle and not wanting to pay out. And some of these companies have been going bankrupt and they're being investigated. So there's a lot of noise around this. And when it came out, I myself thought, well, it's a wonderful thing, but I don't need it, so I'm not going to go for it. And the reason I'm going for it now is because there was a lot of guys, like I say, that are involved in it. But yes, that is a problem. You're $3,000 in profit. You've actually done quite well. I mean, that's excellent. And then they shut you down. I mean, that's actually not good enough. I think you should name them here so that everyone can see who they are. USDT with these involved. You see, like myself, my wallet, I'm not a big fan of Bitcoin, by the way, but all these guys also insist on paying you out in Bitcoin. So I use a South African Bitcoin wallet called Luna. Fantastic, because you can actually send the money to your bank account. So that works for me. There's also a thing called bitcoin.com. Have a look into it. I don't know, it works in all the countries. And I think you can get a Euro card with it if that's something that interests you, just for information. Well, there you go, Connor. Exact Trading. Yeah, I'll have a look at them as well and see who they are, because this is really, it's getting out of hand. There's a lot of guys out there, and I don't want to mention too many names, but I mean, if you have had a problem like that, you should mention it and let people know, because that's factual. It's not a lie. That they closed your account, $3,000 in profit. That to me is absolutely ridiculous. If you had real money and you had traded it that way, that money would be in your account. Let's be honest, that would be your money. So they just don't want to pay out, obviously. That's clear to me as well. No, I don't like that. I really don't like that at all. So yeah, our US 500 trade is a little bit down this morning, but I'm not worried about that. It's in the trend and it's going down, so I expect it to go down. Yeah, no, I'm not a big one for these Bitcoin. I mean, sorry, these watch the Bitcoin. Don't get me on that one as well. But yeah, on when the funded trader guys start messing us around like that, I'm really, really not into that at all. One of you guys had the Great British Pound US dollar, said it was going sideways. Yeah, it sure is, eh? Sure is going sideways. Great British Pound US dollar, if you are long or short on this, let's see. I think we would have been short on that, and yeah, it's seems to be coming to its support. So yeah, you can sort of start moving your stop losses down and see where you come out with that. Actually, no, I don't trade on sessions as much as, I'm opening this live show on the session because it's a session, and the US I'll open on that session because it's a session. But if you're trading on the 5-minute candles or the 15-minute candles, then it might be important to open your trades on a session open and follow those rules. But I'm not a rule-based trader. I'm a no indicator sort of support, resistance, price action trader. And I don't sit and look at the charts all day. It's not my thing. I go and do my other things and keep myself busy going to nature and stuff like that. So no, I trade on the candles. I trade on the 4-hour execution. I trade on what I see. I trade on the pattern. So how do I look for my trades? That's actually quite an important question. I will look at a pattern. I'll look at a trend. I'll look at, there's sort of 3 ways you can look at something, right? You can look at the trend, which is one good way of getting into a trade, and you can take trend continuations on market structure. So, for example, going down, going up, going down, going up, going down, and you can take it every time it retraces and carries on with its short trade, or same vice versa going long. So you can do that kind of trading. I also look at when a trade hits, I don't need RSI, stochastics, and that sort of thing to determine this, but I will look at a sort of lamp pole like this and say to myself, that trade looks kind of overbought. It looks like it's run hard. To me, it looks like this is something that could turn around. The trade turns around, breaks the structure. I'm looking at a short trade. So when a trade sort of reaches its end, or that sort of thing, or when trades are in a range between support and resistance, you can take those trades when it hits support, when it hits resistance, and you get the green candle, the red candle coming out, the red candle coming out of resistance, the green candle coming out of support. So that's another way to trade. How can, it's very, I'm trying to say it as quickly as possible. and to put it forward to you as quickly as possible. But at the end of the day, for me, it's not so much about the charts as about the mentality of how you approach your system. I don't expect you to change your system every 5 minutes or to use a different system if you have one that's working for you. What we need to understand is we need to manage our risks. So in other words, keep your stop losses at a specific level. If your stop losses are $200, $250, $500, keep them at that level. And then try to make more on your wins and keep your stop losses solid. Don't move them down, don't add to them, and that sort of thing. So that's what's important in trading for me. So that's kind of, I look for my trades with the trend. I look for my trades with the price action. I look for my trades with a support and resistance. You can also look at supply and demand. I've got a few videos in the system on supply and demand that might actually help you with that scenario as well. Supply and demand can also work. There are days when I'll actually draw Fibonacci onto the chart just to quickly see where it is and if it looks like it's in the right position. But I don't even need to do that because you can basically just look at the chart and see what it is. And if I was to draw Fibonacci onto this right now, this will probably be on the 38 or somewhere around there. So yeah, you don't really need it. You just need to look at where the market is actually going on the day. So the thing with trading is a 50-50 game has been a big thing, but a lot of people don't quite agree with me on the 50-50 principle, and it is quite difficult to get it across. So we'll go over it now, and we'll actually talk about it. But Alice mentions here that she tried to hedge, and I'm losing with this, so I stopped. Good thing that you stopped, Alice, because this is all about the 50-50, right? In the market, if there's 20 people in the market, 10 of them are buyers and 10 of them are sellers, all 20 of them believe that they have an edge. All 20 of them believe that they're going to win their trades, because nobody gets into the stock market because they want to lose. I don't know anyone who gets into the market, the Forex trading, the futures, whatever, that gets in because they actually want to lose trading. Everybody wants to win. So the point of 50-50 is no matter what your system is or how good your system is or how great your system is, you'll always have a basic 50-50 chance of winning the trade or losing the trade. Now, don't apply it to your system. Your system, you might have an edge on your system. Your system might win 7 times out of 10. It might win 5 times out of 10. It might win 8 times out of 10. But the way to apply your system is how you take your stop loss and how you take your profit. So for example, you could win a trade 8 times out of 10 by simply taking small profits. But when you take one big loss, that's when it becomes an issue. So for example, if you just take this is what's in front of me right here, and you look at this. Let's say you took a long here and you made a profit, took a long there, you made a profit, took a long there and you made a profit. So let's say you made these 4 little profits, but then you left this to run into stop loss. You see how long that tail is? You would have lost all of that all the way down to here, and you would have done what Alice was saying here, tried to hedge it, tried to come back on that, and it would have just got worse and worse and worse and worse. So you would have doubled up, doubled up, doubled up. Is that what you're doing? Obviously, that's what you're doing. You're trying to hedge, so you're doubling up on your trade. So at this point here, you finished. You can't hold on to this trade anymore. You're so deep into it that you have to get out. The loss is massive, and you've negated all 4 or 5 of those wins that you had. So while you'll say, I've got an 8 out of 10 winning system, the 2 trades that you lost put you in a negative, put you behind. So you're losing at the end of the day. Whereas what I'm doing is taking the trade the wrong way here, losing 4 times, and everyone's looking at me thinking, Rob, you just lost 4 trades. What the hell? I'm waiting for that trade short. And I'm taking the short. I'm positive in the trade. And I'm adding to that trade in a positive sense. And I'm making the money not on a hedge, but rather on a win. And that negates all my losses. That's the difference between my trading and everybody else who's claiming to have a large win ratio. You don't need a large win ratio to be profitable in the stock market. What you need is a couple of good trades. What you need is a couple of good wins. For example, in the last week, I've taken a couple of losses. I lost on Brent crude. I can't even remember what else. I won a couple of small trades, nothing, no big deal, but we haven't really hit anything big at the moment. But for example, this US 500 trade, which is actually losing for us at the moment, we're in a loss. That's fine. If it gets to the loss, we lose again. But if this trade wins, if I lose basically 200 and something, $270. I'm going to lose if I lose this. But if I win, I'm going to win $1,350 if it gets down to the 52. So that win ratio, that risk to reward ratio is quite good for me. It looks decent. And look at this, it is kind of bearish at the end of the day, even though it looks like it's trying to recover here. So we take the chance, we take the shot. It's a 50-50 shot. Yes, we can say the odds are in my favor. The odds are in my favor that this will most likely be a winning trade. So we're thinking we've got the edge and we should be able to win. But there are another 10 guys against me who are saying, no, we're long on this and you're wrong and we've got the edge. So that's what makes it a 50-50 game at the end of the day. A lot of people will disagree with me, you know. Connie, you sent an email to Mr. Paul actually asking what happened to my funded account. Good topic of conversation for the channel because we could learn something. I agree with you. It is a good topic of conversation. My big issue with all of these guys is I don't want to get into any legal battles with funded trader accounts, and I don't want to mention too many names and that sort of thing. So yes, topic of discussion. We can definitely discuss it as a fact, as a factual thing. Your account was closed, and it was closed in your belief because you were too risky, or because they thought they said to you. So all I'm saying is, yeah, okay, so that's their excuse. They need to explain that. They need to come back to us and say, why? You know, why is this the case, and how is this the case? Did you, for example, I know on this account, I'm allowed to lose $1,000 in a day. So, or I'm allowed to lose 4%, right? So I know that. I know that's the case on this particular channel, or on this particular funded trader markets, and on this $25,000 account. This I understand. And on my real account, I will open 10 trades with $1,000 risks on each trade because I know I can cover that trade. But that's my real money, and that's my own risk, and it's high risk for a lot of people, and it's not that high risk for me. For me, it works. So I know that's working, and those trades are open. I put those trades out every day to the members, by the way. Now, if I trade on this, I can't open all 10 trades because I know that I'm going to go into drawdown, as they call it, and it's going to close this account. So I can basically, I've noticed, maybe open 1, maybe 2, maybe 3 trades at a time just to stay on the safe side. So if you kind of went into that negative somehow, maybe you went past the 4%, or maybe you lost too much money for them, or whatever the case on one particular day, even though you were in a profit, that might be their excuse. I don't know. It's not an excuse for me. I don't agree with it. I don't like it, but you know, it's probably something to do with that. But just check out the legalities behind it, because I tell you what, I believe the fine print can be quite immense on some of these things. I like these guys, funded trader markets, because at the end of the day, the one thing I liked about them immensely, as a challenge test for us as a group, was you can keep the trades overnight, you can keep the trades over the weekend. And that for me is one of the most important things, because I trade on a 4-hour, I don't sit and watch the charts. I'm not a 5-minute trader. A lot of people are 5-minute traders, and you can trade with 5 minutes. Hi, Carl. Good to have you on board, man. Alice says, people, please give likes. Yeah, I could ask you for likes. It's some likes there, dudes. Anyway, yeah, no. I'm going to try and keep this going. So I think what we're going to do actually is we're going to have the European session on the Tuesday, like we're doing now, and we'll have the US session every Thursday, and then we'll have our normal videos on the Monday, Wednesday, and Friday. I never thought I'd get to this position on this channel where I'd actually be, firstly, talking to you guys live, and secondly, putting so many videos out. Because my initial thing was to put a few videos out just to tell people that, hey guys, you can't just make $1 million in a day trading. I wanted to get the message out there that trading is not that simple. It's not that easy. It is a career. And all these guys are duping you into buying challenges, doing this and getting involved in and buying courses. And they're telling you can turn $100 into $1 million. And it was upsetting me. Let's be honest. It was upsetting me. I've been doing this for 30 years and I'm watching this thinking, well, how come over the 30 years I've never been able to take $100 and turn it into $1 million and buy a Lamborghini and show it off? So I thought, hang on, I need to put 1 or 2 videos out and show you guys what the reality is behind trading. And unfortunately, fortunately, actually, I'm enjoying this. Sorry, wrong word. I'm actually enjoying this now. And I never saw myself getting to this point where I've actually got quite a nice channel, growing quite well. I never saw myself becoming so good at, or better at YouTube. I wouldn't say good. I'm saying, I'm learning the technology. I'm getting into what's going on, and I'm understanding how to do all this stuff. And I'm having a lot of fun with it. Let me put it that way. It's great. So another thing I wanted to tell you guys is, we were discussing position sizes, and what I found with this funded trader markets is it was really nice to be able to put a position size together by placing an order and just putting a stop loss in. So for example, are we long or short? We're long on gold, right? So you would put your stop loss in at 24.90. I'm just using that as an example. And you want to know how much you're going to be losing because you're risking, say, $200. So how much does that equate to? Well, 0.2 gold. And that, I don't look at exactly 200, guys. So between 200 and 250. So this will be 240 if I took that trade. So it actually shows you how much money you're going to lose if you take this trade. And the thing is, I noticed on my main account, for example, my MetaTrader, you can't do that. You actually can't do that. And all my years with my MetaTrader, I would just sort of put an amount in, click buy, and I know how many to buy because I know how much my risk is because I buy them and sell them every day. So I don't calculate my risk. I know how much it is. If I want to buy €1 US dollar, I know how much I'm paying. I know how much my risk is. And I don't do the order thing. I just do click buy, sell, buy, sell, buy, sell. I started doing it on this funded trader account because I wasn't quite sure of their spreads and that sort of thing, which reminds me, funded trader accounts have wider spreads, by the way. They're a bit like the spreads we had 30 years ago. Huge. Okay. You can, if you've got a cash account, get very fine spreads, just by the way. Anyway, I found this position calculator. I've used it before years ago, and I just thought you guys might want to use it. I'm not affiliated to these guys in any way, and I haven't actually put a link in the description. Sorry about that. This was an afterthought. But if you guys want to work out your Forex currency pair accounts, risk ratios and sizes and how many you want to trade, this is actually quite a handy little product. You can choose your product, your account currency, put your risk ratio in, and your trade size and your risk, and you can use money or you can use risk size and just calculate, and it will calculate how many you need to trade. So we've got an account. What's the account size on this funded trader? 25,000. You could say I want a 1% risk ratio, and my stop loss is, let's say it's 15 pips away, and trade lot size 1. Calculate, and it tells you how many you can buy. So you can buy 1.67 lots. It's actually quite a fun little thing to use. So I just thought I'd show you guys that. This is the funded trader markets that we're on. Okay, here we are. Right. These are the Why have I got 2 golds here? Oh, that was me just now, wasn't it? Messing around. Let's put the US 500 back on here. Yeah, look, it's the Euro session. Alice, I wanted to see how many people would come on the Euro session, because I must say, on the US session, we had about 200 watching, which was great. But obviously on the Euro session, we're a lot smaller because all the people in the US are asleep as well. And I know that 35 to 40% of my account is US. So yeah, 34 current viewers. It's okay, guys. Let's just let's keep it going, and it'll grow, because people will get to know about it, and it'll grow, and people will join us. Don't worry, Alice. It's great. It's not a big deal. It's not the end of the world. I'm just having a great time having a live channel, by the way. Yeah, no, it is an interesting thing. So when you're trading, I noticed, okay, let's go back here and let's just have a look. You know, somebody said to me once, you know, when I said I don't want to trade something, I think it might have been Bitcoin, but Bitcoin's very volatile, eh? Yo, what a volatile product. And it's not something I trade on the normal anyway. But I think I said somewhere down here, somewhere in this area, yeah, don't trade it and don't worry about it. And then somebody said to me, why don't you just follow it down? And while you are perfectly correct, you've also got to think for yourself, look, the trade setup has got to be right before you take the trade. So don't just follow it down. Don't just follow something down. Make sure the trade setup is correct before you follow it down, before you take the trade. So this trade setup on Bitcoin would only have been correct now, starting to come into play. So at that point, it wouldn't have been correct at all. I would actually wait for it to get to the trend resistance and then maybe look to take it short. I did mention that I think Bitcoin will probably go down to the 45,000, but I don't trade Bitcoin. It's not my thing in the least. Don't touch it if I can help it. Can you make a living out of trading? Of course you can, if you know what you're doing. Do you only use the 4-hour chart? No, I do use other time frames, and I'm going to talk to you about that now. Can you use this trading technique on lower time frames like 15 minutes, 1 minute? Yes. Okay, so let's answer all those questions now, right now, while we're here, so that we can understand exactly what we're doing. Now my mouse is getting in the way here. Right, okay. Of course you can do this on a 5-minute time frame, no problem. So if you go down here to the 5-minute time frame, all you're going to do is make the chart a little bit bigger. The only problem is you're going to have to take these levels from a lower time frame. So not from the day, maybe from the hour or something like that. But on the 5-minute time frame, there's your support, there's your resistance, and it's going to hit resistance on the 5-minute time frame now. That little candle there on the 5-minute time frame looks a bit like a hammer. So there you go. That's telling you it's going short. But the trouble with candles, guys, just remember, candles only tell you what's happening on the next candle, not on the next day. So this will tell you what's happening for the next 5 minutes, not for the next hour or two. I don't trade the 5-minute generally. 99% of people lose when they trade on the 5-minute charts because they're not as reliable as the day. But what I will do is, if I'm trading on the lower time frames, is I will go to the higher time frames first. And I'll just go and get a feeling for the day. What direction are we taking for the day? Is this a bullish or bearish scenario, I say, on the US 500? Are we bullish or bearish? Then I know when I'm trading on the 30-minute or the 15-minute or the 5-minute or the 1 hour, whether I'm bullish or bearish overall on the day, and which is the best way to take the trades. And if you're trading on the 5-minute, if you know that the day is bearish, then just wait for the trades to hit the resistance on the 5-minute and then go down, and don't take long trades, whatever the case. So the reason I don't trade the lower time frames is not because of the heavy losses that people take on those time frames, but rather because I don't like to sit and watch charts all day. I don't like to sit around staring at a chart and stressing out and wondering if it's going to go up or down. And I've tried it. Believe me, I've tried it. And it's not good for the gray hair. And I prefer to take a trade, put my position in place, walk away, come back and see how it's done at the end of the day. But that's probably because I've been doing this for 30 years, and I started out when you could really only invest in stocks. And, well, that's what I believed in those days anyway. And I used to buy the newspaper. I remember I used to stay in Pretoria, so I bought the Pretoria News, and it had all the stocks in it, every single company, and I would go through the list, and I'd choose what I wanted to buy. And the next morning I would phone and say, buy Rand Gold or whatever, and they would buy for me, and that would sit in the market. And there was no trading in and out during the day. That was like, get the newspaper at the end of the day. Let's see what it looks like today. Oh, it's gone up. Fantastic. I mean, those trades, you would keep them for a long time. Let me tell you something. And we used to draw our charts in pencil. And goodness me, guys, those were the days. Now it's all in front of you, and it's all straightforward, and you can sit and watch charts and trade on the 5-minute chart. And some guys are really good at it, but this system does work on the lower time frames. Believe me, it does. But by the same token, the guys on the lower time frames tend to rather look more at the candle itself and look at the price movement on a session open. For example, if the price moves above the day's price, and then it's a long, and all these little rules and things that come into play. My system is very basic, very simple, very straightforward, and let's say very easy to relax and let trade. You don't have to overthink it. You don't have to get overcomplicated. What you can do, for example, what I sometimes do is, if I'm looking to take a trade on a product like this, and I'm thinking, well, should I or shouldn't I? Then I will drop time frames and see what it looks like on the lower time frame. For example, I'll drop, say, to the 30-minute here, and just have a look at, what does my trade look like if I was to trade it on the 30-minute? Where would it stand on the 30-minute chart? Is it a long? Is it a short? How bad is it? And it'll give you insight as well. And then on the 30-minute chart, is it going long? Is it going short? Where are the candles closing there? So that can help you with trading as well. It can also, get you into the right frame of mind. So if you're not sure, it's a kind of a sniper way of looking for your trades. Find your trade on the higher time frame, drop down to the lower time frames, and look for that entry or that entry point. But be very careful of trading in on the 5 minutes, because, like I say, a candle only lasts for the next candle. And there's been many a time where I've traded in on a 5-minute, and it's turned against me because it is just not as reliable as the higher time frame. It's just a way of getting into the time frames and that sort of thing. When you say, can you make a living out of trading? Yes, I've been making a living out of trading for many years. But can you become a millionaire out of trading? Yes, you can. You totally can. But here's the thing. It's not a game where you just can expect to jump in and hit the jackpot. It's a career like any other career. It's a difficult game, and it's a difficult career to learn. Only 20% of traders will make a living out of trading. So as long as you understand that, then you'll understand that this is not an easy career. So, if you go and study to be a lawyer, or you go and study to be a doctor, it takes years to perfect that profession. You don't learn it in a day. But for some other odd reason, people think that they can come and start trading and they'll understand it in a day. But it's easy to learn how to use a chart. For example, I can show you this, and you can understand it either immediately, in an hour, in a week. It won't take long for you to understand how the chart works. But will take time. is for you to get your mind set right, for you to get your mind around how charting works or how the stock market works, to see patterns in the market, to get a feeling for days that are up, days that are down, how fundamental news affects markets. And well, not that you have to trade it, but you have to understand it. And also the mentality behind trading. And that's why so many people argue with me on the 50-50 principle. Because you have to switch your mindset around from a factual picture that's on in front of you that says, if I take this trade, I will win this trade because the picture tells me so. But that picture you're looking at, what it actually is, it's built up of millions and millions of traders in the market. Those are not just pictures on your computer screen or on your phone. Those are people trading. Those are human beings trading the markets. Some of them are algorithms, but mostly, even behind the algorithms, there's a human being waiting for a profit. And at the end of the day, you are looking at a situation where there's a whole bunch of people sitting behind those trades waiting for a profit. So you have to get your mind around the fact that you're actually trading against people. You're not trading against a computer program. You're not so when you draw a line, that line isn't a barrier. That's just where you think all those people will start to buy or sell, or your orders will come in, or that sort of thing. There's a lot to learn, and it takes time to understand the volumes behind it, the people behind it, and how it all operates. So yes, it's easy to show you how to work on a chart, and it's easy to show you how to get into the game. But you have to understand at the end of the day that you're trading against people, and there's a 50% chance that they might win, and there's a 50% chance that you might win, no matter how good or how bad your system might be. So yes, you can make money, but it depends how good you are and how you learn and how you get on. There was more questions here. I don't believe in smart money concepts. It's too complicated, and stop confusing yourself. It's seriously, no. You know, there's so many of these concepts and systems and strategies and ideas and things in the market that, you know what, guys, come on. What's the point of having all these fancy systems, really? What are they actually doing for you? Look at gold, right? Just go long. It's, you know, what you have to understand in the market, like I said to you now, you're trading against people. What you have to understand about the market is when you're taking a trade, you know what? It's either going to go up or it's going to go down. That's as simple as it gets. Now these guys come along with all these smart money concepts and all these fancy, if the stars align on the right and the moon turns bright and the cheese falls off the moon, then you should take a trade. I'm sorry, but I don't agree with it. I think it's a whole lot of rubbish. And some people say it works. You know, it's like I said to you now, if you draw a line on the chart, it's not a barrier. It's just a line that you've put there to say, I believe that there's a whole lot of traders going to be there that might be going long, and I'm going to go with them, or something to that effect. Most of the money in the market comes from the pros, the big money. They move the markets. As retail traders, we don't move the markets. We follow the markets with them. The big guys are making the big trades. They're moving the markets for you. So, you know, when you think you're gonna beat them somehow with a line, with a smart money concept, the market's going to do this every single time you take a trade. So someone comes along with a concept and says every single time that you take a trade, the market's going to do this. So do you think those pros aren't going to pick up on that? They aren't going to pick up on, do you know what? Every time these guys take this trade, they think it's going to go that way. So let's go the other way, and we'll take all their money. It's not going to work, guys. So that's why I go back to my basics from 30 years ago. I draw my lines and say, well, you know, every time the price gets here, it kind of goes the other way, or it's going in that trend, or it's kind of like it's really hit a point now where I know in the past normally it's really overbought and the guys normally start selling when it gets to this area, or you know, that sort of scenario. But to look at a specific way that a market trades, that's going to change on a regular basis. It's not going to stay the same. So no, I do not believe in smart money concepts at all. So that answers your question most likely. Sorry about that, guys, but you know that's just me. I'm very straightforward about these things. Waiting for Euro CHF to go up. Euro CHF. Let's have a look. Euro CHF. You know, I don't trade the Asian markets because I'm asleep usually. Swiss franc. Sorry. Okay. Let's just see what we've got here. You're waiting for it to go up. It's messing around at the moment, isn't it? Let's have a look and see. Let's take it to the day. Let's see what we've got. Let's see what we've got here. Right. You're waiting for this to go up. You're probably doing the right thing, but just keep one thing in mind. You're waiting for this to go up. You're a Coral, eh? So Coral, look at this. This is bearish at the moment. And the market structure says it's going down. See, up, down, up, down. So if you go long, it's a good long, but it's a short-term long. What you're looking at is it's going to go to this level of about 95.68, and then it's going to continue on down. So it might not even get there. It might actually go to 94.95 and then start going down again. So you can take it long in the short term, but you're going against the trend. The trend is to the downside at the moment. And I would actually prefer maybe to wait for it to get to the upper side and then go short. But you can take the long. The long is fine. The long will probably take you up to about this level here. Now I'm looking on the day chart. Let's take it back to the 4-hour chart and just see what you've got there. On the very short time frames, it's definitely most likely a long. Here's another thing to be very careful of, Carl. Wow. Now I see this on the 4-hour chart. That's actually quite scary. There's a shoulder here. There's a huge head, and there's a shoulder here. Head and shoulders are one of my favorite patterns. And if this breaks down below this support, if it breaks through this support, it's going to go the length of that head down. So just be careful of that. But if it doesn't, it hasn't played out. So if it doesn't, good long, and it might just bounce up here and go back in the northerly direction. But just put your stop loss here and adhere to the stop loss. Just watch the stop loss, because if it breaks through this, it's a baddie. It's a baddie if it breaks through. But yeah, the long looks fine. No problem there. Okay, so I would look at that. There's no problem with that. Should you only trade US 500? I trade everything on earth, actually, except Bitcoin, actually. I would trade it, but I'm just not a firm believer in it. And I do investments as well. So yes, you can trade anything you want. The US 500 is great, but I don't think, I think yesterday was the first time I traded the US 500 in a good couple of, maybe a week or so, because it had got so long that that was enough for me. And then I traded it, and then it broke even. And yeah, I think it's about a week or so. So yeah, we're back in the US 500 again. I do like the US 500. It's a great trade. But I mean, you can trade the Tech 100. You can trade, I mean, the NASDAQ's great. It's great. It's the Tech 100. You can trade Wall Street. You can trade the DAX. I love the DAX. The DAX is a good trade on indexes. And then Forex, of course, Euro, US dollar, Great British Pound, US dollar, Euro, Great British Pound. I love the Euro, Great British Pound, usually good movers and that sort of thing. Um, yeah, I agree with the 50-53. I also think that swing trading strategies make the best sense. Totally. I totally agree with you, Connor. That's what I'm trying to promote here is, day trading is very difficult to master. And I think your swing trading is, especially if you're starting out, it's a much better way to go. It gives you time to figure the market out. It gives you time to understand the market. It gives you time to think. And even for myself, I prefer swing trading because I can leave the trade, like I say, and not be too concerned about it. Um, for example, this US 500 trade that I've got here, I've also got the gold trade, but this US 500 trade is only a $200 risk on it on a challenge account, which isn't even, according to this, not even real. So at the end of the day, my real account is risking $1,000 on that, and that would be much more serious. And I'm sitting watching that. What you're going to do if you're sitting watching your trade is you're going to see a couple of these red candles. Now, I know a couple of traders out there that change the color red to black and it makes them psychologically feel better about it. But your brain still knows that it's going in the wrong direction. And when you see your trade going in the wrong direction, you tend to get kind of jittery, or you tend to your brain is so difficult to control it. You're kind of like, oh, I need to get out of this trade. And you'll click out of a trade and you'll think, why did I do that? Why did I click out of that trade? That's the problem with day trading when you're watching charts. And the other thing is when you're going to a profit, let's say you're going to a profit and you see that profit and you think, oh, I'm in a profit. What? I'm going to take that profit. And that's your brain. Your brain just beats you up. It makes you take it. And you take the profit and it carries on going and you think, why did I do that? I should have left it. Or I should have just moved my stop loss up. So watching charts can be quite daunting on your psychology. So be very careful of sitting watching charts if you're starting out. And I know it's fun, and I know it's great too, because you need something to do as well. But it can be really daunting on your psychology. No matter who we are, some of us have got stronger psychology than others. Some of us are gamblers at heart, let's say, and we can do this type of thing. And some of us are not. And I'm one of those who are really, although I've done this for so many years, I don't believe I'm one of those gamblers. I believe I'm more risk averse, I'm more careful, and my brain gets moved around quite quickly with things like that when disaster starts to strike it. Like my eyes can't stop looking at it thinking, oh, it's going down. And so I rather walk away from it. I've made my decision, and then I know that I don't have to stress about it. So yeah, that's just a thought from my side. Hi, Divine. Thanks for the lovely compliment. No, you don't need to redraw the lines, unless of course you end up with a situation like this where you go to the 5-minute chart and it's way off the bat. But if it's not way off the bat, no, you don't need to draw the lines. But what you do need to do, so you say redraw the lines on the 30-minute chart. So let's say you go to the 30-minute chart here. And you've got this rather large day level. And you know where the day level is now. And you know what's happening on the day level. You know that there's been a downtrend and you want to go long. So now you're on the 30-minute chart. And you're thinking, well, I actually want to take a trade on the 30-minute chart. And you actually can. So if you take this exact trade that we talked about now, the Euro CHF, and you say, well, on the 30-minute chart, if I look, I can draw in a level here, and that's my 30-minute level. But as long as you understand that that's your 30-minute level, and you've got a trend on your 30-minute level that says you can buy off this level here, which is 0.9362. But now you already understand that on your day level, your limit was around this 94, which is pretty much a resistance on your 30-minute level as well. Okay, so you know where your level is. So if you're on your 30-minute, you can trade it on the 30-minute, knowing that that's your major support on the day, so you know where you are. You know on the day that there is a bit of a downtrend, and you know that on your 30-minute, you could take a long trade out of here with a green candle, of course. Wait for the green candle to confirm your trade. You get a green candle out on your 30-minute, takes you up to your resistance here, And then you also know that you're probably going to need to take profit because of the structure on your daily level. So that's kind of where you are with it. Sometimes I don't even draw the lines in. I just look at the chart and I can see already where it's going and what's happening. So yeah, you can clearly see there's definitely a resistance at the top here, which is probably going to only appear on the 30-minute chart and lower time frames, of course. On the 4-hour chart, that particular level is not going to show up so clearly because it's somewhere around there. There it is there. Okay, so yeah, it's quite a decent level, but your market structure, you see your market structure coming down here, so you've got to be careful. It's going to come into this level and it's going to come down again. So that's why I say you can redraw the lines. Well, pretty much this is swing trading. You say, give us an example of swing trading. This pretty much is swing trading. Swing trading, what it's about is slow trading, let's say. So, for example, you take a trade in the US 500 and it's on the 4-hour chart, and you leave it in and you leave it in for a day or two, and then it comes down, and then you can take a trade when it gets down to the bottom going long. If you want to trade on one product, you can. Swing trading is just basically not day trading. That's all. It's just a terminology. Don't let it get into your mind. There's basically 3 types of trading. There's day trading, which is trading in today, get out today. That's it. Okay. Then there's swing trading, which is get in today, leave it overnight, couple of days, get in and out of trading. It's short-term trading, but it's not get in today, get out today. It's get in today, you can get out tomorrow, the next day, whatever. And then there's investing, which is get in today and never get out, pretty much. So don't let the terminology get to you. Don't let it overcomplicate you. Don't buy into what things are called. Buy into making money. Get your mindset into, I'm going to make money. How am I going to make money? Don't worry about what everything's called. Worry about that later. Really, don't let it worry you. Oh, it's in a range. What's a range? Just as long as you understand what it is, doesn't matter what it's called. If it's called this, that, the other, moon, green cheese, whatever system, don't worry about it. As long as you know how to work in a simple way and make a profit, that's all that matters, guys. That's really all that matters. Stop worrying about the terminology. There's so many guys that try and teach you all the terminology. I remember when I was in school, it used to drive me nuts. And I was doing history. Every history test, all they wanted was dates. Dates. And all I was interested in was the actual story. That was an interesting story, but what date did it happen on? And I'd be like, why do I have to learn all these dates? Absolutely nuts. Buying into, in essence, they put so much importance on names and dates and things that's not important. What's important is that you can make a profit. That's what's important. Learn how to work your platform. Learn how to trade. Learn how to buy and sell. Learn how to put orders in. Learn how to manage your risk, and learn how to make a profit. That's what it's about at the end of the day. It's all up here. It's all in the mind, guys. And that's all it's about. Do I use news for trading? Well, that's an excellent question. That is one of the best questions I've had in a long time, because I spent a large portion of my career hanging my hat on the news. Man, I would wait for the jobs figures, the non-farm payrolls, the PMI, the this, the that, the other. And then I learned that I was driving myself crazy, driving myself completely nuts, because then you start to realize that there is so much news out there daily, okay? And when it occurs, the market, you'll see, it'll take this huge jump. It'll jump up, it'll jump down, it'll jump up, it'll jump down. And you find yourself trading out of trades for no reason at all, because you think, well, that news sounded bad, and you trade out of the trade, and then 5 minutes later the news is good. And you why is it good? Why did that suddenly become good news? So I stopped hanging my hat on the news because it drove me completely insane. Absolutely. There was one stage where I didn't even use charts. I only traded on the news. I hung my hat on the news and I gave up on it. What I do with news now, and if you want to, what I do with news now is I look at if there's a big event in the world, something really big happens, a war, an invasion, a crash, a bank goes bankrupt, Lehman Brothers, Bernie Madoff runs off with all the money from Enron. Let's say, for example, tomorrow you wake up and Bitcoin is gone, right? Because it's a big Ponzi scheme. You wake up in the morning, and don't say it can't happen, because it happened with Enron. Everybody believed in Enron. I mean, Bernie Madoff was on the exchange. I mean, he was so respected. So don't say it can't happen. So you wake up tomorrow morning and Bitcoin's gone. That's a news event. That's serious. Okay. So that means everything's crashing. So that's when I hang my hat on the news now. I don't look at every non-farm payroll. I don't look at every jobs figure. I don't look at every PMI. I don't look at every CPI. I don't look at every little thing that happens in the market anymore. Because that's basically a whole bunch of guys who are making up their own stories as to why the market will go up and how the economy will go and why we're going to cut interest rates or add to interest rates and all the rest of it, when the markets are basically controlled by the Reserve Bank and the money flows. Think about this now, okay? We're moving markets with interest rate cuts, and we're moving markets with CPI and on jobs figures and that sort of thing. When in fact, the entire market is like a company. Like, so for example, if you look at any one particular company, you look at its assets and you look at its liabilities and you look at its basic value on any particular day. And it depends how much money it's got and how much debt it's got will determine that company's value. And effectively, the same applies to a country. So a country's value is based on what it owes, how much money it's got, how much money flow it's got. And that will effectively move the market according to the economy and the inflation. And the only thing that the guys working in there with these figures can do is manipulate it a little bit up and down, try and keep it balanced so that it doesn't get out of control. So, no, I don't hang my hat on the news anymore. I actually stopped hanging my hat on the news. Yeah. Alice, yeah, you're also in the US 500. Yeah, I'm on the US 500 short, so let's see how we go. Yeah, no, I see you swapped from 5 minutes to 12 hour, and I saw results straight away. Yeah, no, look, just trade on the slower time frames for now. If you really become brilliant and you become expert at it, then go for it, then trade on the 5 minutes. But I don't know. I know pro traders that know the market far better than me, far cleverer than me, that can't trade on the 5 minutes. There are very, very few people that can make a profit on the 5 minutes. I do know one or two people that can do that, and I respect them highly for it. They're amazing. They can actually take a 5 minute trade and they'll hit it so hard, and I don't know how they do it actually. I would love to know how they do it, but it's all up here. It's all in the mind as well. It's nothing to do with the charts. Let me tell you something now. It's about how they approach their trading. It's about how they approach their wins and their losses. I can promise you that. But yeah, there's some guys out there that really can do it and they know how to do it. Euro, US dollar. Yes, we'll have a look for you, Connor. Are you long? Okay, let's just quickly check the Euro, US dollar for you. Euro, US dollar. Now, I got out of this trade the other day. Let's see, long. Well, right. I haven't looked at it for a day or two. Let's just have a look at this and see. Let me remove all of the drawings because these are older drawings. Let me take it to the day chart. And let's just do a new analysis on the Euro US dollar and see where we stand at the moment because I think it's important to do that. And I think if I look at it, yeah, if I look at it, okay, just gonna move that. Okay, now move that up a little bit. It doesn't matter, it's fine. It's actually absolutely, there we go. That's better. Now we've got a better level. That's fine. Okay, now let's draw in. I'm sure we can get a bit of a better level. The top. Okay. So your top level. Okay, so I'm going to use this. I'm going to use that. Let's just have a look for you. So you say you're long. Now, if you look at your day chart, you're on the right track. She's up. The market structure is going up. It's come back down. Yep. There's your long trade. Your long trade is coming out of there. That's perfect. Look at your market structure. Up, down, up, down, up. That's perfect. You're looking at a good long structure here on your day. If you take it back to your 4 hours, 4 hours. Okay. Let's just see here. Yep, on the 4-hour chart. That's perfect. Yeah, you can stay long. No problem with that. That's a good long. Look, there'll be a call for a short down to this level here. So put your stop loss. Make sure your stop loss is below this level at 109.60. Because otherwise, unless you've been long for a while, in which case, okay. But your stop loss needs to be down here if you're just getting into the trade. And there is another support here on the 4-hour. Do you see it? Support, support, support. So that's quite good. Shouldn't break through that. And then a long trade up into the doldrums of the 1162. There's a good risk to reward here. Looks very good. Look, in the short term, it is a little bit bearish. But that's going to turn around because on the day chart, your day chart is bullish. So it definitely does look like it could be bullish. I wonder if I can see, what did I call on my other? I'm just going to have a quick look here and just see what I called for Euro US dollar earlier on today, or what my other account is doing with Euro US dollar. Look, the Euros US dollar is in a sell at the moment. All right, I understand that. So, okay, the other account is holding my Euro US dollar as a sell. But that is coming to an end, obviously. And yeah, so it was in a sell from up here. So yeah, that makes sense. Why would I have bought it up there? And it's come down. So, okay, yeah. So now it's probably going to turn around. You asked about swing trading, so now you swing it and you go long. That's basically where we are with it. So yeah, you're okay. It might come down a little bit further, like I say, down to the support and then go up, but you're on the right track for a long trade on the Euro US dollar. Nothing wrong with that. Okay, open trades. There's quite a few. Okay, so let's have a look. Do any of you trade the VIX? Because the VIX is a goodie. Let me just show you the VIX. I wonder if it, the VIX. Let's see if it comes up here. Volatility S&P 500. There we go. What I always do with the VIX is I wait for it to get down to this level down here, around about 14, 15. And then I take my long trade and I wait for it to do this. See what it does? And it does that on a regular basis, man. Well, not regular, every couple of months, but it makes you a fortune. Let me tell you, it actually makes you an absolute fortune. I'm going to take it to the weekly chart, and then you can see what I'm talking about here. See the spikes? See those spikes, okay? So with the VIX, what I always do, that's a little trick for you guys. Since you're on the live show with me, buy it around these low levels if you've got access to it. And then you see once in a while you get those spikes, and you take your profit and you run. It's absolutely marvelous. Fantastic product if you got it. go for it. I see it's not available on the funded accounts, but it is available on normal accounts. So just if you've got it available to you, go for it. It's absolutely fantastic. Euro US dollar, as I say, was in a sell. France 40 in a sell. Okay, the France 40. Why am I in a sell on the France 40? France 40 hit a very steep level. Okay, so like I said to you, there's three ways of looking at the market. Now look at this, heavily overbought. Looks like it's running out of steam. Nice red candle. It hit resistance, came down. It's a short. Okay, I'm still in the short, even though it's bouncing up a little bit. I expect it'll go further. I'm expecting it to get all the way down here. So France 40, we're short. The Great British Pound US dollar, I was short, but I got stopped out on a trailing stop. Not sure where it was, okay? It might have been here. I got stopped out on a trailing stop. So I was short, got stopped out, but I made a profit. Doesn't matter. There's no problem with that. But you can see why I was short. It was a goodie. Okay, Euro, Great British Pound. I think I explained I was long. I was long on this trade, and then I moved my stop loss up, and it got taken out yesterday, somewhere around here. The reason I went long is because it hit support. It looked like it was heavily oversold, and I know it was a risky trade against the trend again, against the trend. And I don't normally like to go against the trend, but the only time I go against the trend is when it's got such a huge move that I'm looking at it and saying, wow, that's really oversold. And I get a movement like this and I get a green bar, then I'll take the long trade. But as I say, because of the risk, I moved my stop loss up to cost, and then I moved it up a bit more. I actually made a profit on the stop loss, so I'm not too worried about that. So that trade is gone. Euro Japanese yen was a sell, but it's a wait at the moment. Nothing happening there. Then US dollar CAD is one of my other favorites. US dollar CAD, USD CAD, USD CAD long trade. Another famous long trade against the trend. Okay, because it hit a serious support. Why do I take these trades against the trend on a serious support? Well, on the Forex trades, if you look at the Forex over a longer period, this is a trick you can use as well, guys. You will notice something very interesting, and that is they tend to stay within a range. The Forex tends to stay within a range. And if you look at those ranges over a period of time, you can say, well, we're in that range. With that kind of movement, you see the support levels there on the weekly. With that kind of movement, you can say to yourself, well, it's had a big move. It's hit that area again. There's a good chance we're getting a long trade out of here. So keep that in mind. That's why I go to the higher time frames when I look at trades. I look at where the trades are and what they're sitting in. That's why you'll see me trade against the trend, and you'll think, Rob, you told us to trade with the trend. You're quite right. I do tell you to trade with the trend, but by the same token, when I see things like this, when I see long moves like this, I'll just go to up to the higher time frame, just have a little look and just see if we're in that range, especially on the Forex. On the Forex, I like to trade against the trend sometimes, simply because of that, because I know those trades are pretty good. Gold, we're in a buy. Gold, I think we discussed this one a little bit earlier. Gold, we're in a buy. Gold is in a range. You can see it's in a range. There's your support. And it's hit the support 1, 2, 3, 4, 5, I think 6 times. We did take the trade a bit earlier, but I mean, we did have a big green candle. So the big green candle was pretty obvious, 24.95 to 24.98. A good trade, long trade in. It's weak at the moment, but it's still a good trade. So, and we're looking for it to get back up to the top of the range at 25.31. The big thing with gold is if you're long and the markets are tanking a bit short, people normally buy gold as a safe haven. It doesn't always work, but it's there and thereabouts. If it breaks through this resistance, this 25.31, then this is a flag pattern. And that flag pattern, I mean, if you look at it on the day chart, and you go to the day chart, then you'll see the flag pattern that I'm talking about. You see this, it's going up, going up, going up, and now there's a flag pattern developing here. Now a flag pattern is a continuation pattern, and it will normally go straight up from there. So if it breaks out, it's going to be quite a decent long trade. But you can't bank on it. Yeah, trading's 50-50. It could break below the support and head on down. So be careful of that. But it looks like a great long trade, the gold. So I'm long on gold. The DAX sell. The DAX I'm on a sell. And I think, let's just get the DAX out for you. The DAX. There's your DAX. We're on a sell there. And the reason we're on a sell there is simply because it broke through. Firstly, it went through the resistance and it failed, and it came back through, turning it back into resistance. It became support and turned back into resistance immediately. Gave us a red candle, short. There she goes, and it should come down to the lower support. Barring that, it'll bounce back up and break through here, but we're short on that at the moment. So yeah, there's a lot of things going on, and the Brent trade we got traded out of. We were short. We got traded out of. We were long. Sorry, we were long on Brent, and we got traded out of it. So that was one of those things. You know how that feels. Look, once again, on the Brent, I did exactly what I told you now. I took a bet on Brent against the trend because it was so oversold. And then it got more oversold. And that's something that can happen in the markets. But on Forex, it tends to stay within the range. But, you know, the commodities are a little bit different. And, yeah, I got caught out with that one. But that's how it goes. That's how it works. So, yeah. Any other questions based on that? Okay, so reason why stop loss. Yes, I'm going to show you that as well. I didn't show you that. Let's just look at this chart here, for example. Right, where's my stop loss? Okay, so I'm just going to turn this into a single chart. And let's just make it the US 500. And I'm just going to show you this chart because it's just so easy to show you. Now we're in this trade at the moment, right? And this is on the 4-hour chart. Now we took the trade because it's broken through its support and turned the support into a resistance. The market structure is down, down, going up, down. This is market structure. Market structure looks like a jagged thing, right? So goes up, goes down, goes up, goes down, goes up, goes down. So I'm seeing market structure here. Now, the reason I put my stop loss over here is firstly because on this funded trader account, we can lose $250 a trade. That's what we've decided on. And that's basically where I want to put my stop loss. Now, it was very difficult for me because on this, I can effectively trade 0.1 of a US 500 to keep that at a $270 stop loss. So that's where it is, okay? But I put the stop loss there. I actually wanted to put it a little bit higher, just away from the highs. But in my opinion, if this trade gets to that point, pretty much my trade's invalidated. So I don't actually like to call them stop losses as much as I like to call them invalidation points. So if my trade gets to this level at 55.20 and it stops out, I lose money. But at the end of the day, why would I try and hedge it? Why would I try and work that trade? Because that trade I would not take if I was looking at the picture and I had no trade. In other words, that trade is a completely invalid trade if it reaches that point. So we stay short on the trade with a view to it coming down to the next support, which is down at the 51.76. it gets there, we make $1,500. It probably won't, because there's another support over here at 53.93 that it has to get through. If it gets to that, I will then move my stop loss into the positive or break even on the other side of this level. And then I know that if it goes back and takes out my trade, I either break even or I make a profit. So we're sitting with this being about 70 points away from us. So if this gets to this level, we'll put the stop loss about 50 points away with a view to it carrying on down. And if it carries on down, we'll add to the trade, and then we'll move the stop loss even further down. So that's why we put our stop losses in specific areas. You choose where you want the stop loss, not the amount of money, and then you put the amount of trade in based on the stop loss. If you get that, it's so in other words, I want the stop loss at 55.20, but I don't want to lose more than $250. In this case, I took 270 because I really want the stop loss in that level. I actually wanted it further away. And then I take the size of the trade based on the stop loss. Don't take the size of the trade first and then choose your stop loss. Choose your stop loss first, then choose the size of your trade based on how much you can lose. So this trade effectively costs me $270, and that's it. If it loses, that's what it cost me. But if it wins, I get the trade for free, and I win, and I make money, and it goes into the account and improves the account, and so on, and so on, and so on. So that's how we choose our stop losses. So in other words, choose your trade based on your stop loss first. Choose your stop loss, then choose the size of your trade. Let me know if that makes sense to you. So okay, you see, when you're adding, that's another good question, and I've discussed this at length many times. A lot of people think that when you add to a trade, you should double it. And sometimes you can't afford to double it. It depends on the size of your account, for example. So especially on a real account, on real money, you're looking at a trade that you're already quite heavy into. You've gone in deep, and now you want to double on that trade, and the risk is just too heavy for your brain to absorb because it's going to melt down. So in a situation like that, you can do one of two things. If you're already into the trade too heavy and you don't want to get in much more because it's a bit scary, then just move your stop loss behind it and stay with that size trade because you're happy with that profit. Or you can add, say, 25% or 20%, or add, let's say you've got 10 lots and you don't want to add another 10. Add another 2, add another 3. Just how you feel about how much you're risking. Because the one big thing that I always play into, guys, is trade within your means. In other words, I don't mean your financial means, I mean your mental means. Because even if you've got millions, if you're risking amounts that you're not comfortable with, then you shouldn't be trading those amounts. Reduce your risk. You've got to be comfortable with the amount of money that you could lose on any given trade. You've got to feel comfortable with that. So when you add to your trade, there's no specific rule. There's no specific, you must double it or you must add 25% or anything like that. Like I always say, don't play too much into rules. Rules are there to be broken. There are some rules you've got to keep, like keep your stop loss and work out your business. But that's your business. I mean, you're working on a basis of, if I lose $200 on every trade, but I win $400 on every trade, I should be a winner at the end of the day. So that's your business and that's your business rule. So stick to that rule. Don't mess around with that rule. Don't go, oh, well, today that trade looks so good, I'm going to risk $1,000 on it. Because all that's going to do is wipe out all your winning trades. So don't go there. Stick to that rule. But there are rules that are sort of easy to move around and play around with. For example, when I double my trade or when I add to my trade, should I stick to a specific rule? No, you don't have to. You can look at what you're comfortable with. You don't even have to add to the trade if you don't want to. If you already took too much to start with, then don't add to it. Just move your stop loss up into the break even, move it up into a profit even, and just follow the trade until it ends and take the profit. But if you want to make more money and you want to add to the trade, let's say you normally take 10 lots when you start trading and you've only taken 2, then yeah, double it, make it 4, make it 6, and add until it reaches the whole amount. Because maybe a lot of the times, why I say add to the trade, a lot of the times when you take a trade, you're not confident with a trade. Confidence is a big thing in this game. And you look at a trade and you think, I should, according to all the factors, I should take this trade. This is a trade that I should be taking, but I'm not comfortable with it. I just, my gut feels telling me it's going to go against me, and I just don't want to take this trade. So instead of taking the normal risk that you would take, let's say you normally take a $200 risk, you say, you know what, I'm only going to take a $50 risk on this trade. I'm just not going to trade more than that. And you get into the trade. And lo and behold, the trade starts going in your favor. And you think, wow, the trade's going in my favor. In a situation like that, that's when you really vigorously need to start adding to the trade, because the trade's going the right way and your trade's too small. So you want to make it the right size. In a case where you normally risk 200, try and add to your trade, but keep your risk at 200. So in other words, if you double your trade and your risk would normally be 400, move your stop loss into an area where your risk is only 200, but you still doubled your trade. To get that, if you just moved your stop loss, it would probably be at a break even, and now it'd be at like a $200 risk. So look at your risk that way. Try and keep your risk in an area that you're comfortable with. That's the important thing with trading. So you just went long on Great British Pound US dollar. Great British Pound US dollar long. There you go. Now, why have I got a big red line across there? Yes, okay. This was previously a head and shoulders. Yeah, but it's okay. Yeah. So you went long at, what level did you go long at now? Because I see it's at 137.95. Don't see a problem with this trade. Let's just have a look on the day. Great British Pound US dollar. Oh yes, it's got the structure, of course. Yeah, we talked about that just now. So it should carry on up. Yeah, there you go. Nothing wrong. Yeah, great trade. Fantastic. On the day chart, it looks decent. So just hang on to it, mate. Just hang on to it. You'll be okay. Just, that's the thing. Like we always say, trading is what? It's a 50-50 game. There's a 50% chance you make it, a 50% chance you lose it. The whole point here, guys, is make sure your stop loss is the correct amount. And then if you win 5 trades and lose 5 trades, then you'll make more on your wins and you'll be profitable at the end of the day. You'll see with my trading on this challenge, we're doing this challenge and we're playing around on this challenge. And I'm not taking all my trades here, but the 1 or 2 trades that I do take here, you'll see that I'll lose quite a few trades. I don't have the greatest win ratio on earth with my trading because I take my trades. But when I win, I win. And that's the important part. Make sure you win big and lose small. So yeah, there'll be some losing trades. There's obviously going to be some losing trades. There's always going to be some losing trades. But that's just trading, isn't it? That's how trading works. So guys, if there's no more questions, I think I'm gonna move on, and then I'm gonna see you guys on Thursday for the US session. Like I say, I did really want to show you my MetaTrader 5 setup, but like I say, I don't want to make it public just at the moment because of my account number and stuff like that. I'm just a little bit worried about stuff like that, and I'm not big on putting that out in public because it's not just us here live now. This video is going to stay on there forever, so people are going to watch it. So just for that, and I just wanted to quickly talk to you about an investing policy, and that is how to invest in the stock market. Because a lot of guys, you guys are trading. A lot of you guys are getting involved in trading, and that's great. And there is money to be made, and you can make a living out of it. But somebody asked me here earlier, can you make a living from trading? And yes, you can. But let me give you some little bit of advice, especially if you're younger. It doesn't matter, actually, even if you're older, because it's only going to take you 10 to 15 years. What you do is open an equity account. Now, equity account, stocks. And then choose, depending on how much money you've got available to you, maybe a cash amount to start with. Choose a few stocks, 3, 5, 10, depending on how much money you've got. Don't go more than that. And then make sure they're pretty good dividend paying stocks and pretty good blue chip stocks, good strong stocks for the future. Oh, yes, Coca-Cola, this sort of thing, you know. And wait for them to correct a little bit, like now is probably a good time. Buy in, and then every single month, put in a set amount of money. If you can afford $500, if you can afford $100, if you can afford $1,000, every single month, take that money and put it into that account and feed it into those shares, whichever one you feel is best on the day. Just add to them, but try and keep them at an even keel, an even level. Just keep one eye on the stocks over time. So if you see one is starting to fall off the bus and it's not looking strong and there's some fundamental news around it that says, oh, that company is going to close or something to that effect, then obviously take the money out of that and move it into another stock. But just take the round money, don't use it, take it and put it into another stock. What you will find in 10 years' time is you've put so much money into these stocks, right? And not only have you invested into those stocks, those companies would have grown. They would have also grown with inflation. And they're paying you dividends every year. Those dividends, you can either put them back in or you can start using them. Those dividends will be anything between 4 and 8% per annum, right? Depending on the company. Choose the ones with the best possible dividend payouts, because that's great. And that money can become like an income for you in 10 years' time, 15 years' time. And you still own the stocks and they're still growing in value as they go, and you can still keep putting on the money back into the equity. Now, this is a little trick that I taught all my kids, and hopefully they stick to it when I'm gone. It's a fantastic little trick. You don't have to trade the money, you don't have to touch the money, but the big thing for the psychology, guys, is when you buy those stocks, you have to understand one thing. When you buy them, you don't sell them. They're not for sale. You bought it, you own it, you keep it. The only time you sell that stock, is when you know that that company is not going to go any further, that there's a problem with that company, when there's some shakiness around it that it might collapse, or there's some fraud in the CEO or something like that. Then you sell the entire stock amount and you buy another company with it and you put it in there. And then you own those companies for life and you keep adding to them. Trust me, 10, 15, 20 years, you're not going to look back. You're going to be extremely happy and you're going to be extremely wealthy. And you have enough money to enjoy. So if you're looking for a way to make a living in the future, and you're looking for a way to be secure in the future, maybe to have some kind of pension, or you want to retire early or something to that effect, that's the answer, guys. It worked for me. It's going to work for my kids, and it will work for you. It always works. Preferred market, choose the US market. It's pretty strong. I had a look at the US 500 for the last 99 years. And if you look at the chart, it just keeps on going up, guys. It doesn't stop, which means all the stocks inside there keep going up and they don't stop going up. So do your own calculations, work it out. You'll be shocked and stunned at how much money you can make. Trading will make you a living. It'll keep you going. But that will give you security at the end of the day. So that's just my quick call for the end of the day, just to give you a little bit of something before I go, something great. And thanks for actually joining me and watching me on my live show. Nelson, greetings to you as well. Sorry you've come in at the end of the video. I'm actually going to be off now. But I hope it helps you guys. No, actually my kids are not traders. Look, they have learned to invest. My son particularly, he invests, and he did trade for a bit, but he's more into certain different types of things, more into art and photography and editing and that sort of stuff. So, but he invests. He does invest in the stock market a lot and the US market. But exactly what I told you guys to do now is exactly what he does, and my daughter as well. Yeah, no, that's great. Thanks, Nelson. Maybe watch the video from the beginning again. I don't know how boring it'll be because, the thing about these live videos is they're not edited. They're raw footage. What you see is what you get, eh? So whether I breathe badly, whether the sound is bad, whether I make a noise, whether my chair creaks, which it has been creaking today, you will hear it. There's no cutting that out, eh? But guys, I want to thank you for joining me. I want to thank you for being with me today. And I'm sure we'll have a lot more viewers on Thursday in the US session. The US session for me is in the afternoon, because as you know, I live in Cape Town. So for me, it's like 3:30 in the afternoon or 3 o'clock in the afternoon. And for the New York guys, it's 9 o'clock in the morning. So they'll be waking up and they'll be starting up. And then for you, the European guys, I think it's about 2 o'clock, something like that. So I hope I'll see you guys then. I hope you guys will join me. And in between, don't forget to watch tomorrow's video, which is coming out. And that will be interesting for you as well. And then I got Friday's video. And obviously, we've got the weekend run up. The members obviously get the trades every morning. We go through the trades for the day and the trade of the day and that sort of thing. Yeah, great. I want to thank you guys. And I think I've said bye about 12 times now. So I guess I'd better be off. Thanks for watching. Cheers. Till the next live video. Arrivederci, I suppose. And thank you very much. Cheers, guys.